What's up, guys, and welcome back to another trade review with me, Oscar, also known as Blackbright nowadays in chat. I'm just going to start off by saying I highly recommend you up that speed level to 1.25 because I tend to talk a bit slow, and I want to save your time, and I know that I hate listening to people that talk slow, so if you're one of those persons, I highly recommend you up the speed to 125. But so we're going to get into some main stuff. First off, I've changed my username perfectly. Also going to change like my YouTube channel, so I'm going to publish this on my new YouTube channel, which is going to be Oscar Blackbright, and I'll talk more in depth of why this change of name in a later video later on in my journey. But so let's get into today's trading. And today turned out to be a really good day of trading. But there is some very key things that you can learn from your trades, as always, as of losses, as of profits. You can always learn something, and you can always improve. You have to work on refining and becoming better and better and pushing you forward always. But one thing that I want to just compliment myself for is that I have been keeping it really small until today actually. Today was the first day where I took on some, not real size, but I took on some size that I haven't been trading with before. So I actually managed to wipe out all of my small losses, which has been just trial and error to get me more comfortable. So I ended up with around 130 bucks in profit on the day, which is, as I said, wiping out all of my losses. So here's my proof, so to say. So 121 on SBOT, and on KC I ended up with 17 bucks. So it's not huge, but have in mind that my trading spreadsheet or my real trades, looks like this. So the last 4 trades has been profits. They have been good trades. I get into KC in just a minute why this turned out to be a scalp, but in the end it would have been a great trade as well. But yeah, it's basically me finding that edge, or finding that comfort in a trading setup, and it turned out to be those gap and crabs, and I'm basically just going to keep on doing them. But we get into the trade and see how I managed and why my thinking process is the way it was. So we start off by, I think we're going to start off by KC actually. So KC and SBOT was my main place. They were the 2 stocks that gapped up pre-market. As I live in Europe, in Sweden, I have a very nice advantage of people because my pre-market hours is from 1 o'clock to, what is it, 3:30. So I have no problem being in pre-market. So I saw both KC and SBOT gapping up kind of big in pre-market. They were the biggest gapper. So I do as I have been doing recently. Start off by checking the filings, checking the news, and basically looking for, first up, the news to be kind of hype. You want to see, as I talked in previous video, and I'm going to mention this right off. I'm going to start to numberize my videos of my trades. So this is going to be 7 and 8. So if I want to later on, when I have done like 100 trades, I can look back. Okay, what was the number of this trade? Number 7. Okay, then I go back in my library, check number 7. But as I talked about in the previous video, which is trade 6, which was on CLBS, that was also within this strategy of gap and crap. You want to look for crapping the SEC filings such as ATMs or warrants. ATMs the is the best. Is the best catalyst, or the best thing that you can find in the SEC filings as of a short seller. It's a really bearish sign, and Casey had that ATM, and they had an ATM of 24.5 million to still sell. So and from yesterday I should have learned by now, and this is what my entries indicates on that, because yesterday we had LTBR, which was basically the same, gapping up on hype news with an ATM, and they are starting to pound in and just dilute those shares even in pre-market. And Casey wasn't big of a difference. It was exactly the same, just that this was a bit more volatile and had some more steam in it. But I got impatient because as I talked previous, I've seen stocks that just rip at open. But it seems that I've found a theme now that these ATM stocks that I tend to find, they don't rip at market open. They just, if they dilute pre-market, like nice and steady, they're going to dilute at the market open as well. So it was a shame that I took out. I only did 100 shares because I wasn't like that comfortable with taking on size as of this, because my risk wasn't way off, but I wasn't comfortable because my plan was to sell this just before market open because I didn't want to be in it. And that's what I did, and yeah, this has been a really good lesson for me, because now I know I have, or I'm probably going to be more aggressive, smart aggressive on these stock that gap ups with ATMs. I'm going to be more smart aggressive, meaning that my risk is going to be tight, but I'm going to probably size up a bit. And I'm going to be more comfortable holding into the market open, as if they have been diluting even in pre-market. So that's the basic idea and the basic thought process and main lessons from Casey. So I'm recognizing this pattern now, and I'm going to look for it for tomorrow, of course. But then we're going to get into SBOT, the more the trade that I held on longer. And you know, Casey was, I don't know if they're the same or if Casey is even, I think Casey actually is a bigger loser in percentage wise than SBOT. But anyhow, I did a really good job of playing out SBOT as well. So I'll see real quick if I can pull up one chart for you as well. But as I do that, the main thinking process behind SBOT is similar to Casey. The only thing that differs them is that SBOT doesn't have an ATM. They have instead 3.3 million warrants that was issued like 3 days ago. And I talked about this with someone in chat, and my thinking process behind this is basically, I don't think it's a coincidence that 3 days after an offering of warrants with an exercise price of 263, that the stock is gapping up on like meh news. I don't think it's a coincidence, because imagine that I were the CEO of SBOT and I'm making an offering with you, or this agreement with you. And as I do this, the stock is trading at 180. There's no like logic way for you as a buyer, or yeah, as a buyer of these shares, to say or to how do you say it, to agree that the exercise price should be at 263 when the stock is trading at 180. There's no like logic within that, except if I, as the CEO or anyone else in the company, knows that or tells you that, okay, on Tuesday we're going to hype up the stock with this catalyst that we basically know that we have. So that's 100% sure that you will be able to sell your shares and we can raise capital in that way. So that was my main thinking process, because if it hadn't been like that, there's absolutely no logic behind there's absolutely no logic behind having that warrant price above the current trading price if they're doing offering. At least that's my thinking process. And what I want to show you is also the key or the major importance of being meticulous. So not only do you want to look into the filings and dig through the 8 a.m., see the warrants, read about the hype news, you also want to look into recent or past or history, like what did the stock do the last time it had major volume. And for instance, I actually think that I was around and I saw SBOT as it traded this day, but so that made me recognize, okay, I think this has been a gap and grab before, and sure enough it had. And if you look into that day, you can see this type of action. So what you can see, or what I recognized real quick, was that, okay, so they usually start to fake out people, or they trap shorts in pre-market. Then they spike up the stock and push it even higher so that they have a bigger range of possible dilution. So they push it up bigger amounts, so percentage-wise, so that they can dilute more without like depressing the stock. So it's basically going to be at the same level as before the gap up, and it's like scary similar these two days, because if you look into these two pre-market actions, and this is not giving you a fair picture because it's not as deep. I'll do it something like this. Like you can't tell me this isn't like very similar. Like we have this first rip, and then we trap some shorts, and then we just squeeze them into market open, and that's exactly what it did. And the fact that I had been looking into this made me really comfortable of shorting it up here, because as you saw here, there was no returning back. It was basically when the top was in, the top was in. There was no more major bouncing. So that made me really comfortable even getting in as before this like quote unquote support area was broken. I could have waited and I could have entered in here and wait for this dip or this crack, which could have been a better way to size in, but it ended up working and I was like really comfortable with this trade actually. The main thing about my entry that I should work on until next time is like I did rush it somewhat in here. I saw dip here, like the crack, and I just wanted to get in, so I rushed it. I somewhat placed an order in weakness. I should have waited for this bounce to get like not to get the better like pennies, but the mentality of entering into strength, because you never want to chase weakness. Also, the main thinking process that why I didn't want to, except for the recent behavior and history, why I didn't want to enter into pre-market was because the shares that were or the warrants that were exercisable was in the 263, meaning that if the stock wasn't trading above that, they were not going to be able to sell these shares. So before we got over that 263, I was not comfortable enough. I wasn't comfortable of shorting this, because then there was no indicator or no like reason for the stock to dilute or sell off or crap. There was absolutely no reason. People was hyped about the news. They saw the gap up, so that's two very bullish indicators if you haven't looked into the filings. So before it passed that 263, I wasn't going to touch this, and that's exactly what I did. Let's talk about my exits and some potential reshorts that I could have done. The main thing that I want to talk about with exits, as you can see here, so I shorted into this 291. Actually, I got a 291 fill. Then I took half of my shares down just after this crack, and this is the key thing that I should and will improve on with my exits. Sure, if I thought that this was a major or an important level, because 263 was the exercise price of the warrants. So I thought, okay, hey, if they haven't been able to sell all of those shares into this decrease, they might going to bounce it up at this level. So when it stopped here for a second, I didn't panic, but I felt that unease within me. I didn't want to be in a big bounce, because I didn't want them to rip it up and just squeeze it higher, squeeze all those shorts who got in with the same thinking process as me. I just didn't want to be in it. But the main thinking, or the main thing that I see in hindsight, is there's absolutely no reason for me to exit here, because we just had that first brief crack, and man, there's not a, like anyone on earth that want to enter after this crack. So what I could have done, or coulda, woulda, shoulda done, is basically erase this this cover and covered in here instead. After we got that second leg of cracking, because now we have decreased a bigger amount of percentage, and we have a row of lined up red candles, which also indicates that a bounce should be coming soon. Then my cover down here in the 230s was basically because I didn't want to be in this bounce, because I figured this is going to bounce somewhere. Because if you even look into the last time we traded this kind of action, you can see that midday we had somewhat of this bouncing. So when we reached that low, we got this bounce, this brief bounce up here to this resistance level. But so I figured, okay, we're going to have a bounce. Probably it's like the odds are favoring in that the most stocks that decrease a lot have some sort of bounce. Either if it's a dead cat bounce, or if it's like a legit ABCD setup. But so I took my shares off my last third, and basically never looked back. And what I wanted to do, what I was looking for, was to reshort at these levels, because I thought this high, or this small bounce after this big crack, was of major importance and major resistance. And that is very true, but it didn't manage to get up there. And I should have recognized this, because I've done the same mistake with the recent trades as well. I tend to set the expectations of the stock, of the bounce, a lot higher than it reaches. So there's basically two areas of importance, and it would be super great if you can duplicate that and do like this. So This bounce here is of course of major importance after this big crack, but as well this small consolidation and this crack is also of importance. So when I have these, so my key lesson or my key my key lesson that I'm going to take with me, that is for me personally, when I have these two resistance points as we near the low of day, and I anticipate a bounce, I should go with a lower one, because I tend to have too high expectations on the stock bouncing. And that's basically it. So the key lessons for myself is be more patient with my exits. Don't sell just because we had that first leg of cracking. Um, Let the chart kind of tell you. Of course, take some off to be more comfortable with the trade. Secondly, when it comes to these like ATM stocks, be more comfortable or confident trading or shorting even in pre-market as they start to dilute, and be more comfortable holding into close as well. And that's basically it, guys. I hope you like learned something, took something from this, and we just cut it right here. And I'll see you in chat tomorrow. If you have any questions, please just reach out. I'll do my best to answer. And that's it, guys. Peace. See you in chat.